Have you ever wondered why people with millions in the bank, people who could buy 5 homes with a single wire transfer, are choosing to rent instead? It sounds backwards, right? We're told renting is for people who can't afford to buy. That home ownership is the ultimate goal, the finish line, the American dream. But here's the twist. That dream might be costing you everything you've worked for. Right now, wealthy people in their 50s, 60s, and 70s are making a quiet but powerful move. They're selling their homes, pocketing the equity, and renting. And they're not doing it because they're downsizing. They're doing it because they've figured something out that most people never will. They've realized that ownership isn't freedom. It's often just a prettier form of debt, a trap dressed in granite countertops and high ceilings. And after 50, when you should be enjoying your wealth, your time, your life, that trap can quietly bleed you dry. Renting, on the other hand, it's not failure. For the wealthy, it's a strategy. In this video, we're going to break down exactly why high net worth individuals are walking away from home ownership, how renting can protect your finances, and why this one decision could unlock a more flexible, wealth-generating life after 50. If you think renting is throwing money away, what you're about to learn might flip your entire mindset. Because the people with the most money, they're not buying more property, they're buying freedom. And by the end of this video, you'll understand why. Buy a house, pay it off, and you'll be set for life. It's the mantra we've all been taught. The so-called safe path, the sign that you've made it. Financial security in the form of a roof, a lawn, and a 30-year mortgage. It's been sold to every generation as the American dream. But for millions of people over 50, that dream is becoming a financial nightmare. Let's talk about what they don't tell you. Owning a home isn't just a monthly payment. It's a series of compounding liabilities. Property taxes don't freeze when you retire. They rise quietly every year. Insurance premiums spike with every storm, fire, flood, or new risk factor that hits the headlines. Maintenance costs grow with both the age of your home and the age of your body. And none of it slows down just because you're living on a fixed income. The average homeowner in a major city is now paying nearly 40% more per month than a renter in a comparable space. And that's just the monthly cost, before the surprise expenses hit. When the roof leaks, the plumbing fails, or the HVAC system breaks down in the middle of a heat wave, you pay a big price. People often discuss equity as if it were a guaranteed return. However, the truth is that your equity is locked behind drywall and transaction fees. You can't access it quickly. You can't invest it easily. And when you need cash the most, during a health crisis, a family emergency, or a market downturn, it's not there to help you. It's stuck. Meanwhile, wealthy individuals are running the numbers and walking away. They're not emotional about it. They're strategic. They see what most people miss, that owning a home past a certain point in life can become a luxury that quietly erodes wealth, flexibility, and peace of mind. And if you've been taught to believe that home ownership equals success, it might be time to unlearn what's been holding you back. Jim and Carol were the textbook definition of doing everything right. Married 35 years, both retired with solid pensions, and living in a beautiful $950,000 home in Seattle they had owned for over a decade. No mortgage, no debt, just pride in their hard-earned property. But pride doesn't pay for a new roof. It started with a few leaks. Then the inspection came. Suddenly, they were staring down a $28,000 repair. The foundation? Another $15,000. Property taxes had crept up every year and were now nearly $11,000 annually. Insurance costs doubled thanks to wildfire risk. Their beautiful home had turned into a high-maintenance liability, all while their savings were just sitting, trapped in the walls. Jim and Carol had what most people would call a dream retirement. But behind the scenes, they were bleeding cash to keep the dream alive. They weren't traveling as much. They were delaying upgrades, watching their accounts shrink, slowly becoming asset-rich and lifestyle-poor. And here's where everything changed. They ran the numbers, sold the home, cashed out $800,000 in equity, rented a luxury condo downtown, modern, secure, no maintenance. That move instantly slashed their monthly costs and freed their capital. That $800,000 now generates more than $40,000 annually in passive income. That covers their rent and then some. They stopped stressing about surprise expenses. They started traveling again. They regained their freedom, not just financially, but emotionally. And they're not an outlier. They're part of a growing wave of people over 50 who are realizing that home ownership might not be the finish line. It might be the obstacle. They didn't downgrade. They upgraded their lifestyle. They didn't give up ownership. They gained control. Because when your money is no longer tied to drywall, maintenance crews, and fluctuating market values, it becomes mobile, flexible, powerful. Jim and Carol didn't downsize their home. They upsized their life. And now, their money is working harder than their property ever did. Here's the part that most people never see coming. The wealthiest individuals, people with more than enough money to buy multiple homes outright, are choosing not to. In fact, 67% of ultra-high net worth individuals rent their primary residences in major cities. Not because they can't afford to buy, but because they know something most people don't. They understand opportunity cost. Every dollar tied up in a house is a dollar that's not working for you, not growing, not compounding, not available when you need it. Wealthy people don't see home ownership as a badge of honor. They see it as a frozen asset. They rent the space and invest the rest. Take someone with $2 million to spend on a home. Instead of locking that money into a single property, they put it into income-generating assets. At just a 6% return, that money produces $120,000 per year. That's enough to pay rent in a luxury apartment, travel, and still have cash left over to reinvest. Meanwhile, the person who bought the house, they're dealing with rising taxes, repairs, and the pressure of trying to sell if circumstances change. The wealthy understand that liquidity is a form of leverage. They keep their money flexible, allowing it to move quickly toward investments, opportunities, or lifestyle upgrades. While the average person waits for their home value to increase by 3% a year, the wealthy are earning double, triple, or even more through diversified portfolios, private equity, or tax-advantaged funds. They've figured out that owning less can actually lead to having more. It's not about avoiding real estate entirely, it's about not being trapped by it. The rich still invest in property, but they do it strategically, through REITs, through commercial deals, through markets with higher returns. What they don't do is sink everything into a primary residence that doesn't pay them back. This is the shift. Renting isn't about what you can't afford. It's about choosing to keep your wealth liquid, mobile, and ready to grow. And that mindset, that's what separates people who survive retirement from people who thrive in it. Most people think the biggest threat to their wealth is a stock market crash. But if you're over 50 and own a home, your biggest threat could be the house you live in. Not because it's going to collapse, but because it quietly chips away at your freedom, flexibility, and financial security in ways you don't see until it's too late. Let's start with risk. Market risk, life risk, health risk. A house isn't liquid. If a health emergency hits and you need fast cash, good luck turning drywall into dollars. Home equity loans often come with additional fees, delays, and higher interest rates. Selling in a hurry, that could cost you 8 to 10% of your home's value in commissions, repairs, and closing costs. And if the market's down, you're stuck. There's no quick sell button on a house when time isn't on your side. Then there's the tax burden. Property taxes don't go away when your income drops. In many areas, they go up. Renters sidestep this completely. Homeowners pay thousands of dollars each year to maintain what they already own. And when you finally sell, you might owe capital gains, depending on your income and the size of your profit. Renters avoid all of it. Now let's talk estate planning, because this is where things really get messy. Real estate complicates inheritance. Appraisals, title transfers, and disputes between heirs can drag out for months or years. Families fight, lawyers get paid, and your hard-earned wealth gets diluted in the process. Liquid assets don't cause problems. They get divided, distributed, handled with ease. That's what the wealthy understand. They don't leave behind properties that spark legal battles. They leave behind portfolios that provide clarity and control. Renting simplifies everything. It removes the variables that turn into disasters. No last-minute sales, no costly legal transfers, no emotional ties to buildings that don't serve your future. It's not just about living easier, it's about dying smarter. And that's a reality too many homeowners ignore until they're forced to face it. The truth is, owning after 50 doesn't always mean stability. Sometimes it's just a liability waiting to strike. Here's the part most people never expect. Renting doesn't have to mean settling. In fact, for people over 50 who understand the game, renting is a way to upgrade your life without increasing your bills. It's how you trade stress for comfort, chores for convenience, and dead capital for living freedom. While homeowners spend their weekends fixing gutters and stressing over HVAC repairs, renters enjoy concierge services, 24-hour maintenance, on-site gyms, secure buildings, and premium locations, all without the long-term costs or commitment. They're not worrying about property values or contractors. They're living. This is the life shift most people miss. Owning a home may provide stability, but renting offers flexibility and mobility. And after 50, that mobility is everything. It means you can follow your family, chase new weather, explore new cities, or try out retirement destinations without the 6-month hassle of selling a house and paying out thousands in commissions and staging fees. You want to spend a year near your grandkids? Rent a place nearby. Want to try coastal living before making a permanent decision? Rent by the beach. Want to downsize without downsizing your lifestyle? Luxury condos and rental communities are designed for exactly that. People think ownership gives you control, but renting gives you options. It lets you respond to life instead of being anchored to a single zip code. It means if your health needs change, or your interests evolve, or the market shifts, you're free to adjust. No strings attached. And the kicker? Many renters over 50 actually live better than homeowners of the same income level. Why? Because they're not burning money on repairs, taxes, and outdated square footage. They're spending on experiences. Travel, family, health, joy. The idea that renting means settling is outdated. The reality is that renting can mean a rise in lifestyle, happiness, and financial control. It's a move that says, I've built my wealth, now I'm going to enjoy it. Because after decades of working, saving, and sacrificing, the goal isn't just to survive retirement, it's to actually live it. And that starts by letting go of what you're supposed to do and choosing what really works. Let's forget the emotion for a second and just look at the math. Because once you run the numbers, the story you've been told about homeownership starts to fall apart, especially after 50. Say you own a $600,000 home. Feels good, right? No mortgage, plenty of equity. But what is that money actually doing? It's sitting, not growing, not paying you, just locked behind walls, shingles, and a tax bill. Now let's flip the script. Sell the home, take that $600,000 and invest it in a diversified portfolio, earning a conservative 6% return. That's $36,000 a year. That's $3,000 a month. That's rent paid in full. And your original $600,000? Still intact, still growing, still working for you. Meanwhile, the homeowner, they're spending thousands each year on property taxes, insurance, repairs, maintenance, and upgrades just to keep the house from falling apart. Add it up, it's not just pocket change, it's tens of thousands a year, quietly bleeding away wealth they'll never get back. And here's the kicker. Home appreciation isn't nearly as impressive as people think. Over the long term, real estate typically grows at a rate of around 3 to 4% annually. But diversified investment portfolios, they've historically returned 7 to 10% over 20-year periods. That difference compounds. It grows into hundreds of thousands in additional retirement wealth. That's not theory. That's historical data. Renting doesn't mean you lose money. It means your money gets to move, gets to grow, gets to serve you, instead of being buried in drywall and driveway repairs. The numbers are clear. When you free up your equity and invest strategically, your rent becomes an expense that's covered, and your lifestyle gets an upgrade, all while your wealth continues to grow, not shrink. So the next time someone says renting is throwing money away, remember this: the real waste isn't rent. The real waste is letting your largest asset sit idle while inflation, taxes, and time erode its value. Smart money doesn't sit still. It moves, it earns, it compounds. And the moment you realize that, everything changes. This is where everything comes together. Because the real change, it's not just financial, it's mental, it's emotional. It's the moment you realize that what you've been taught your whole life might no longer serve you. That ownership isn't always a symbol of success. It's sometimes just a habit no one ever questioned. For decades, renting was framed as failure, as something you did until you made it. But look around. The people who've made it, the financially independent, the time-rich, the mobility-driven, they're renting on purpose. Not because they have to, because they want to. Because they understand the difference between what looks smart and what actually is. Renting isn't a downgrade. It's a reallocation of power. It's the decision to keep your wealth flexible. To say, I'm done locking up my money in something that doesn't grow, doesn't move, and doesn't pay me back. It's also about control. Because when you rent, you're not stuck. You're not anchored to a location, a market, or a property that might not fit your life anymore. You can pivot. You can respond. You can explore. And when life shifts, as it always does, you're ready. This is the shift wealthy people have already made. They stopped thinking like homeowners and started thinking like investors. They stopped worshiping ownership and started optimizing for freedom. Because the real goal of wealth isn't just to have more stuff, it's to have more options, more choices, more control. And for people over 50, this mindset is even more powerful. Because this is the season where freedom matters most. Where flexibility isn't just convenient, it's everything. You've worked, you've saved, you've built. Now it's time to let those resources build something for you. Not just a structure, but a way of life. Not just an address, but an experience. Let go of the belief that renting is losing. Understand that in the right strategy, renting is winning. And the people who truly understand money, they've already made that shift. Now it's your turn. At this point, it's not about whether renting works. It's about whether you're ready to see your money differently. Because the rules have changed. The old playbook of owning a home, paying it off, and coasting into retirement, it's not just outdated, it's financially limiting. Renting after 50 isn't a step backward. It's a strategic move toward flexibility, freedom, and long-term wealth. It's how the financially sophisticated stay liquid, stay mobile, and stay ahead. It's not about what you can afford. It's about what your money can do when it's not trapped in your walls. You've spent years building wealth. Now the real question is, will you let that wealth Build a life that works for you. The numbers don't lie. The lifestyle upgrades are real. The tax and estate benefits are measurable. And the peace of mind that comes from knowing your money is working harder than your property ever could. That's priceless. This isn't about selling your house tomorrow. It's about stepping back, reassessing, and asking the one question most people never do. Is this home serving me, or am I serving it? Because you have options. And the moment you understand them, everything changes. The people with the most money aren't clinging to what they own. They're leveraging what they know. They're not stuck in tradition. They're focused on results. So if this opened your eyes, don't just keep scrolling. Subscribe and stay tuned. We're just getting started on smarter wealth, better freedom, and how to make your money actually serve your life, not the other way around. The dream isn't ownership. The dream is freedom. And freedom starts with the choices you make next.